Alright, so importantly, when we're talking about entries and exits, like we have to start out with like, ignore this by the way, what was on here, we'll move to different charts. I love sharing screens with you, me too. The main thing we have to talk about is our time frames at the very beginning. It's the basic comprehension of what our overall ideal is. On top of that, you have to measure basic company fundamentals. I don't care if a chart has a graph, or a graph, a line over some wicks, and it looks like it can run like this, like Roblox, for example. But just because it can do that doesn't mean it's confirmed. They still have to fundamentally do those things. With that being said, if you study your company's fundamentals and you give yourself enough intrinsic value, you can sit throughout a move like this all year long and then capture this, or if you're just holding common shares and you're selling options against them week by week. But that's besides the point, we'll go over that later. I know specifically most people are focused on intraday trading, you know, swing trading. I'm going to talk about scalping, swings, short-term swings, leaps, things like that. But we're going to go over the short-term one. Now we're going to talk about times and sales tape in the order book. When you're trading the market every single day, if you don't have access to level 2 data and times and sales data, it's one of the most basic packages you can get with a broker. If you're trading off Robinhood, get off of Robinhood. It's the worst platform you can use. It's literally the chum bucket of all brokers. Doesn't mean being disrespectful to anyone who uses it, because I have it too. But you're limited in ranges of data. You can't do a lot. On top of that, if you don't have a 25K account, you're limited to PDT restrictions, versus if you swap to somebody like Webull, you make a cash account through something else, you can buy this data pool for $5 and use it through their platform. Yeah, and spread flows. It's really bad on Robinhood too. But you can then get this level 2 data and find when larger volumes coming through the tape and when it's not. The order book is the amount of shares coming through on the bid and ask. Time and sales is just exactly what you think, how much people are selling and buying and when. It's really important because once your stock starts testing certain levels, you want to see a lot of buying come in, and you could see really large equity orders come in out of nowhere. For example, like SPY here, when we touch low a day and match this pre-market low, and it floods time and sales and the order book, and you get a fat breakout. It's just ways to help you confirm your trading. It's a really simple thing. If you don't have it, definitely recommend it. Thinkorswim has it too on their broker. So yeah. Moving on from that, we're going to go to VXX, which is a interesting topic to discuss. Not a lot of people understand what it is. People think it's something that you can chart, and you kind of can, but you kind of can't. It's a little complicated. The easiest way for me to explain it is the measurement of calls and puts to the market. When I've been actually observing this long-term trend, for example, this 2016 crash all the way to, the 2015-2016 crash, and then the 2018 one as well, and measuring when we had kind of a bullish period for a couple years, and then our bull run now, it's kind of the same amount of percentage moves in relation to call and put volume, and we're starting to not move anymore in price, so the market's starting to feel a little bit more shaky than normal. You can see VXX spike a lot of the time throughout the market just to shake people out. Sometimes this isn't bullish at all, sometimes it is. It just depends on the overall trend of the market. I like to pair this alongside SPY perfectly because they're like an inverse of each other. Blue modding. Of course, Pika, you too. Thank you, I appreciate you. You should be good though mod wise. I'm also going to share this with you guys in seminar discussion, so bear with me here for a second. This is a basic little thing to know with VXX. If SPY is green, VXX is red. It's a good, healthy day. If they're both red, it's a healthy pullback overall. If SPY is green and VXX is green, it's cautious. You can see these a lot of the time. For example, and the past few days on VXX we've been green, and SPY on the past few days has been this. So having these pulled up side by side is really beneficial, just so you can see what's overall happening with the short-term trend. I'm not gonna ever really recommend momentum scalping and day trading. I think it's a lot riskier way of investing, and it's not as safe. But with these tools on your side, and you practice with good risk reward and tight stops, you can profit. How I lost 23K, yeah, exactly. I've seen people, like, for example, we can talk about a story. I was trading, oh god, what was it? 2 days. There was once I had 25 0 DTEs, and they burned a $5 value. What's the difference between VIX and VXX? I mean, there's really not too much of a difference. We can go into the technicals if you want, but VIX, VXX, VVXY, all different ones you can use. I prefer VXX the most. Plus 16K with swings too. In relation to that story though, glad we can laugh about it. Yeah, I mean, I've burned 2 accounts before. It's profitable. Like, that happens. But I had 25 0 DTEs bought for $25. They burned a $5, and then JPow spoke and pumped them to $30, and I got out break even on all of them. So it's just like, that was, yeah, you just gotta live and learn. And we can talk about what people are doing that's kind of making them burn their accounts. It's really specific, because most of the time it really is just bag holding. So we can see SPY here and VXX here. They literally almost trade in the same exact range. 1455, 1455, pump of the day, flush. So this is something to have on the side by side. Alright, the next one. This one's going to be a little more interesting, so I'm not going to pull this one up for now though. But we can talk about SPY this morning. I'll put it up on here, but not on the Webull. We took a SPY trade this morning immediately into the bell. You can kind of see it with the screenshots I added to the little thing I shared. We were kind of chopping in an open, and I'll pull up VX up again. I need to get rid of it. It's my bad. So us right into the open, and then over here as well. I see choppy price action, but good volume, and I see a liquidity spike here on the right side. And this was me trading in real time. Like, I was live in voice chat. Everyone, if you were there today, could have saw it. And I saw this spike, and I stepped in front of it, and I got caught in this candle, and it rallied pretty hard and then came back down really fast, and I filled a average for 1.8 on 462 calls. The reason why I took that specifically was, regardless, even if we just rallied a little bit and we didn't break out of this range, then they would be near in the money and I can get out for a pop. Regardless, I held longer, but I got filled for 1.8 here, and I got lucky on a premium pop, and I took a first partial immediately 2 minutes into the trade, and I bought 2 of them. And we took it at the next area, supply and demand, and I took it here because of this pre-market level where we had recently just sold off because we broke out of this resistance. From there, I scaled out one more because I saw some signs of weakness showing up in this little area after we took another one up here, and we got out of the trade. I could have kept holding it, but it worked out. Can you repeat what made you take the first entry? I saw a spike in VXX all of a sudden, like going into the morning, but I've been kind of observing the overall trend for the past couple weeks, and usually when we head into a weekend that's a long weekend, we kind of have a decent morning to start with, especially with how bad our past couple of days have been. So I saw the spike, we barely got over the range, and I saw really aggressive volume. And similar to what we were looking at on the tape also got slammed really hard. So I followed the large money rolling into the index, basically. I just got really lucky with a good average. I definitely underpaid. I could have paid more, but it was a good fill. Like when I saw this like wick down and we hit this level, I saw easily over a couple million shares just thrown like in a half a second, and then from there like NASDAQ slammed a bunch of 100 orders in, which are like 100 contracts, 100 contracts, 100 contracts. So like, and it was a good bit. But you can also see as soon as we get it, VXX breaks down and rejects our super trend. So I don't like to discuss this VXX again as a chartable statistic because it's just a statistic, you know, it's not an asset, but it still is the in-person spot. If you guys have any questions, by the way, if you guys want to ask any questions, like in voice, I can unmute and we can go from there. We can take a pause break. What do we refer to fills on the bottom? Does VXX move before SPY? They usually move at the same time. But VXX will show hints before SPY, yes. What do we refer to fills on the bottom of a very large 5-minute wick to our advantage? That's a good question. So just like, if I understand it properly, I just want to make sure I am, so correct me if I am wrong. When we look at our contracts, we have our bid, our ask, and our mid. You can observe it just on regular share sizes, and it's the same thing with contracts. I like to get filled below the mid or bid. If I think something's going to really run and I had to overpay a little bit, then you try and get filled above the ask, but you don't want to get caught on this. This was very risky, and this was a short-term trade, but I hope that makes sense. So you set a limit order, go. No, I got you. So I think what he's trying to say is that he got a good entry in a contract really quickly, and he barely had to be in the trade to be profitable because of these wide bid and ask. I like that take. Just wish I had a name for it. Yeah, wicked in is a good way to say it. Wicked in and open. Yeah. Especially with these stocks like Netflix, for example, that have like crazy bid and ask. You don't want to be overpaying for something at the mid when it's just gonna immediately, if it flushes $2, the bid and ask is gonna be fucked because they have to change the way their the prices are basically allocated, and other people are changing their orders as well. SE, yeah, those are vaccines. Those are all great examples. Are you focused on resistance and support levels and profit targets? Yes, I'm focusing purely on price. Percentage is awesome, don't get me wrong, but like your job as a trader at the end of the day is to get out. You don't want to stay in unless you're holding something long term. At least that's a whole different discussion. But if you're trying to take these quick momentum trades and you know you can get in and out, you don't have to think about it, you can take these winners, bam 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 bam, and hold one runner and just repeat your process over and over and over. It's a little tedious at times, but if you get used to it, your risk reward becomes a lot safer and you lose less money overall. I apologize for asking, but I can't really see what you have the candle set up for. Just wanted to know what these are on. This is on TradingView. Yeah, you can use contracts as flipping. That's a good example. How do you see the tape for timing the bottom of the support? Well, we shared the time and sales in the order book in the little docket that I sent. This is just on 1 minute. I'm just sharing it for an example. If it's fresh in the open, I'm watching 1 minute for about the first 5 to 15 minutes, just because I want to observe the time frames and see what's happening. Where'd you get your level? Pre-market? Yes. And we could talk. I'll show the levels on SPY later and everything. So you try to buy under the mid, between bid. Yep. If it's sensitive, yes. And if I'm overpaying and things start flying, then you get an ask. But I use VXX to confirm that first, even if it's a short-term trade. But in terms of the tape for timing the support, you just got to keep it. Where did I say we shared before? You can click. Here. I'll just pin it for now if anyone loses it. But yeah, in order to, I have 3 monitors that I'm looking at. But even then, you just kind of watch the overall bid and ask and share sizes coming in, and at the same time look at your price. It's the only real way you can kind of do it. Sometimes it becomes a little, not every time it's going to work, obviously, but you know, for example, we could talk about, that's why I'm gonna like go down and share this other trade with you that we took. Yeah, coin as well. That's a great one. I wish I had the level 2 for that, unfortunately. But we saw a lot of volume in coin like 30 minutes before open, and Bitcoin was running at like 42K and holding. And then rallied immediately into Bell. So, did coin work? In the morning, coin worked, yes. Not in the afternoon. With small cash accounts, it's important to skip snipe trades once funds are used. And yeah, you can't reuse those funds. You're correct about that. Alright, so let's continue down this little list though. So I'm just gonna do that again so you guys can look at that. So the second one, this was really interesting. So I also like to play stocks to the downside and then flip it to the upside. It's a way of getting better averages on short-term contracts and then taking out multiple partials. So I'm specifically mentioning this, and then I'm going to highlight VXX here as well at the same time, so you can kind of understand what happened with it. Here we are. So we made a mistake and we got filled in a SPY long in this little range right around here. So we got filled in a partial right here and it broke down. We remembered our levels from before and remembered this prior base. So we took a second contract in once we started seeing more buyers show up, and that's where the VXX showed its second sign of weakness. And then we took a third contract in this level around our pre-market low. Yeah, VXX over VIX. I just feel like it's a little bit better. And it has volume too. VIX doesn't have volume. Because you can trade VXX options as well, if I'm not mistaken. Correct me if I'm wrong, but I'm pretty sure you can. No, you can't. Not on Webull, but you can on some. Which I don't recommend, by the way, but look into it if you want to do it. Do some research. But taking multiple parts. What's up? Yeah, newer to options. No. You're good. Because it's a triple non-leveraged. Either way, we can get it later. So You could just play short here. We get the VXX confirmation breakout. You get it over its price range, and it's the same little pre-market level as well. So you get a small spike for shorts, a flush to the downside. You play a quick IV pop, but instead I filled 3 longs here, and I said my stop in my head was going to be this mental sell low, and we filled in 3. And since my cost average is now changed, what I'll then do is, if we reverse to the upside, VXX starts breaking down. I took a first partial out to get your base entry out from initial because you averaged down 2 times. We get our second contract out. This is going to be at this resistance area where we were prior. And then we get our third one out up here at the same demand zone that we were aiming for prior. We could have held it longer because we were testing this new zone again, which is this is a stronger uptrend. But with the markets on a Friday, we're trying to be as safe as possible. Eventually these ran to 1.5. We sold, I think, for 115. Yeah. But that's a way you can play as well. So either play short with it and then go long and fill your longs while you're short, or just wait for the move and then go long. But it's like one of the easiest SPY trades, for example. We'll get off the SPY here, but let's move to Tesla. This was a good conversation. So trendline breakouts. Measuring the space between a stock's trend formation is one of the easiest ways to understand how a stock is going to perform. If you understand the long-term trend of a company and you can identify the space that it's in, you can capture very big volatile moves before they even happen. Long-term Tesla originally was bear flagging. Most people didn't even know this all the way back in January of last year. And it broke down from the bear flag, went to $550, and then started forming this more deeper wedge. And this is a very large space in terms of consolidation. Even if we're just measuring this to this alone, that's a 39% move. So our range in terms of when we break out is going to be about double that, give or take. And we got close to it, 75%. If we're measuring the whole move, 92. But it's usually double the percentage move on a lot of these names if you can get these long-term breaks and hold them. Tesla's everyone's favorite example, so I like to show that. Big D has one of his big personal winners, and that's Roku. That's another perfect example of capturing these long-term trend breakouts. Even if you didn't get this big one and you just played a trendline confluence like this, it's really simple. You don't have to overthink it too hard. You can even move it up and get this move when we see relative strength. To identify these trends, you want to also focus on your volume. You can see a lot of accumulation here with tight price action over the past couple months, but this was all the way back in June of last year, and it can help show you longer term trend breakouts or double tops like this that result in $400 moves to the downside. Let's see what else we got. Fibs. I don't want to go into a very, very large overview of Fibs. Everyone kind of has their own opinion on Fibs, and I'm gonna let people live with their own opinion on Fibs. I like to explain it as the easiest way to measure, not easiest, but one of the more interesting ways to measure supply and demand and support and resistance, and using them side by side with each other along with all these other tools that you have can help predict shorter term and long term trends. SPY is one of the most respectful stocks I've ever seen in relation to Fibs. I like to measure the major pivots of a stock when I am using these Fibs. So for example, I'm going to grab the Fib retracement tool for now and grab this September low in SPY and bring it up to this wick up here. I'm going to get all of them so you can see it exactly. I'm also on log scale for people that know or want to know. It's just a way to change your chart. You can do it on TradingView. Every single charting platform will have it besides robbing the hood. And we made a 0.5 retrace here, which is a median way of looking at things. It's not too bullish, not too bearish. You want to see following price action confirm things as well. So I'm going to then apply an extension tool, and we're going to measure these same 3 points that we just talked about, and we get a 0.5 rejection here. And this was also a 0.5 bounce. And this is just one of the many things that it's done in the past couple months in terms of respecting price. Like, we can keep going and observing it. Like, measuring this rally isn't too hard, actually. We can then apply a trend-based extension to this higher low that it made, because it didn't break. Let me fix that. It's the wrong one. Sorry. Don't want to do that. I have to make sure it's that. Yeah. So my thing that I like to talk about as well with Fibs is I don't like to look for the exact cent measurement. Again, it's a general range of support and resistance that you can use to understand long-term trends. Breaking above a 0.618 fib, which is a kind of golden area to sell or continue an uptrend if it breaks after a random 5-day rally after the dividend date, is a very good sign that a top may be near, just short term. And what we can even do to continue is we can measure this rally here, so this low to this high, move it up exactly, and we get a 0.786, which is a weaker bounce. Now you see how this bounce failed to get over this confluence here. That's why I've been kind of stating for a while, for me to be more bullish, I want to see 473 break, but we are somewhat forming this weirder area of demand. Even continuing to measure it, we can measure that 0.236 rejection, and we can see this low a day bounce as well as that same exact kind of bounce. It was a weaker bounce. So for me to be bullish short term as well, I want to see a break above 466, which is also our former area of demand. You can kind of see how price starts building up and responding to these areas. It's going to be interesting in the next couple of weeks as we're going to tech earnings, and we're going into we have Netflix starting out, Apple, Tesla, Microsoft, banks are reporting on Tuesday. But this is a way that you can start measuring stocks. I would start messing around with it, start measuring big long-term pivots, and extensions are going to be when you're looking for upside targets. Retracements are downside targets. And then if I'm still measuring the long-term bigger picture, and I think that 480 is this top is my top, then you would do something like this. We can stop for now though. Again, if you have any questions, I know fibs are weird. When using fibs and confirmations, do I move to shorter time frames? Yes. So like for example, just measuring I measure them all on the daily. I don't ever do like 5-minute to 10-minute candles, but this like daily 5-day move, we then can go to the 15-minute here, because I'm measuring this low to this high, and we can see the overall range we've been trading in the past 5 days. And if I'm measuring the retracement to the downside, and these levels are confirming as supports over and over, and I see price responding to it, and it's confirming the fib set for me. You just want to see the most response possible. It's the same way as kind of identifying it as a support or a act of resistance too. But overall, long-term fib sets are healthier because you can understand the general uptrend. Yeah. But there are differences in a fib set that's me measuring something like this, so a couple month range, versus if I'm measuring something like because you can go back all the way, for example, to 1997 and grab this low, go to this high, and you get a really bullish 1.272 bounce, and it's a double bottom from both recessions. So it's like, they're like magic numbers. They're weird, cool little magic numbers. Use them as a general range of support. But measuring short-term space, price will react overall very sensitive to it. So yeah. Anything else? We can keep asking. Fibs are fun. I like to simplify them too, because people are like, Elliot wave and all that theory and all that, it's cool. But if you understand this, it's just basic mathematics. It's just average true price and range and numbers. That's really it. Pika shared some slides that you can look over to. If I'm not mistaken, they're in they're up in the channel. We'll share them again at the end of it. Fibs and volume, your thoughts? Same thing. If volume responds to fibs, then it's the same thing. Thank you for that, Pika. Yeah, if volume respond to fibs, then I mean, you gotta think about it the same way. Like, look at this, right? Like right here, our wick rejection near old high a day, and look where our liquidity spike comes in. And this is on a 1 minute chart. You know, I agree. That's how I trade. So. Also, if you guys don't have live data on TradingView, I don't know if other brokers have these, and you guys like to trade SPY a lot, these little wicks that you see every single morning, you'll see them on 8 o'clock on all of your tickers. They're one of the most broken things I've ever noticed on a trend, and price always seems to react around them. So check them out. They're in your pre-market at 8 o'clock every morning. I'll mark it and then we just trade from there. And they always seem to build around fibs too, which is kind of interesting. I've been trying to like understand why, but I've been just studying for now. But any more questions? And then we'll move on to some easier things. Algos are set to fib levels, of course, but you know, I want to see some more data. How long have I been trading options? I've been trading options for 2 years, and I've been investing for around 6, but I've known and understood a large portion of the stock market since around 10 years. I'm gonna say 10 to 12. But on and off until the past 3 to 4. We should just write a SPY book, honestly, because we didn't understand how to read it. What time frame do I use RSI and SPY? 5 to 15 minute, and then the daily. I use all time frames. What are you interpreting the dark pool prints? Can you do an example? So let's do the 15 minute on SPY, and I'm just gonna mark all the levels so you can kind of see how price responds to it. So I'm measuring both the lows and the highs of those wicks. So this would be another one up here, this area right here, and then this area up here. I'm gonna use this, which is this low right here, and then this high. Actually, no, it would be that high technically. You don't have to mark all of these because you start getting away from these prices and you just adjust them when necessary, so your chart isn't dirty. Yeah, those are the little prints I'm talking about. I don't know if they're dark pool prints. Someone this morning told me they might be the exercise in your contracts, so correct me again if I'm wrong. I'm just calling them that because that's when price is reacting the most sensitive and you see a lot of order flow come in that's private. So I might be wrong, but in terms of the title. For the fibs, you start from the bottom to top, or does it matter? For retracements, it's technically proper if you're measuring from the bottom to the top. Extensions, you want to measure bottom, top, middle, usually, because the retracement usually doesn't go lower, but it technically can if you're measuring an extension, like let's go with COVID, or let's go with like the 08 crash all the way to now, and like the 2012 little dip. So like that, for example, let's kind of look at the weekly on this. This is extensions 08, 2012, 2011. Max views on stream. I have it recorded. So we should be good. Is it safe to say enter at support and exit at resistance? How to handle the fake breaks below support or above resistance? It's a hard question. Honestly, it comes with experience. That's what. Yeah, someone else can stream and increase seats. That's also true. That is a good question. Sometimes you gotta just hold on for the ride. Sometimes you gotta understand the things that we're gonna talk about later on. If you don't understand those, it becomes a little bit harder to overall stay in a contract versus not, and when something's stronger. But when something's showing general weakness like this, like SPY today, where we rallied, but it's really wicky all the way to the top, and we fail to even get above our levels that we're talking about earlier, then you can kind of understand it's going to be a short. So, yeah, averaging as well. That's why I was telling you that earlier. The trade I took to the downside and buying more was helpful. Are pre-market levels more important than previous day levels? I actually think pre-market levels are more important. I'm not gonna lie. I think people sleep on it because I think price is still active during that time frame. I think people are still too focused on what's live in front of you, like this on the daily, but I think both are equally as important. I'll just say it like that. So let's move on to the DIXGX. I'm not gonna go too crazy on this one. It's something that you can use long term. I gave you the percentages to use it. If you want to use it, just click that little link. I'm not gonna change the screen recording right now. Actually, I can do that. I can drag it over. But for you guys, click that link for the video. I'm pulling it up on my screen. But this is the DIXGX. It's not anything too complicated to understand. Just know when you're measuring these two, you can buy longer term or sell things longer term. That's really it. It's a great tool to use and check at the end of every day. This doesn't update throughout the day, so just check it once the market's closed, like 20 minutes afterwards. It's pretty good to understand the relative strength of things. High DEX, 45%, lots of buying. Low buying if it's a low DIX. And then measuring volatility as well in relation to it. One of the most basic tools I think everyone knows for intraday trading is Vwap. I'm just going to use this one. There's multiple ones you can use. We'll go over that one real quick if you guys have any questions, by the way. Because I know not a lot of people understand it, but some people might have never even seen that before. Yeah, Luna, great example. Great example. Are you using Vwap on your chart throughout the day? Yes, it's one of my only indicators I use. I normally don't use any indicators. I actually hate indicators. We'll go over that later, but I just don't like them at all. Normally, I'm not even using this Vwap. I'm using what's it called? Webull's trading view. I like it, or Webull's Vwap. I'm sorry. I like it a little more. So the volume weighted average is just, yeah, DeFi, it's insane. Yeah, a lot of Webull's stuff is just good. I don't know. I like their platform a lot. So Vwap is a average price, it's a little indicator you can use that shows the average price of security adjusted around volume. It's calculated by taking the total value of trading the security and dividing it by the volume of trades during that period. Combining a lot of these tools we've already talked about can be helpful. This is a little more complicated version of a Vwap. It's kind of like a Vwap with a Bollinger Band. So this middle area is going to be that Vwap, and then getting up out of this range is showing a bullish or bearish sentiment. In order to get out, you need to get back in or out. You get what I mean? But even this, we bounced up the bottom of our Bollinger Band immediately and open, and that's looking at a 5-minute candle. We can look at the 1 minute, and even if like it bounced off super trend on Webull, it was right here on this indicator. A lot of things showed that we were going to run it open, and the volume also kind of indicated it too. So this is why I pulled up today. It was one of the easiest examples I've seen in a while, actually. And it also shows weakness at the same time. This is an area to help you understand where market makers are starting to pull out, because you can see heavy signs of liquidation, so they don't have much contracts left. And then at this point, it's just retail buying. Guessing you see it with the super trend indicator. If you have Webull accounts free, I love it, man. It's that little in the screen document. It's that kind of red and green line that I shared. It's on the top charts as well. I love it, man. I don't know why. It just gives me fancy little arrows, and I buy and sell. I'm kidding, but it does do that, but that's not why I buy and sell. I wish it was that simple. It kind of is, ironically. That's what's fucked. People just overcomplicate it a little bit. Yeah, it is that simple. They just overcomplicate it. Yeah. Alright, so let's kind of move into price action. Price action is a complicated topic that not a lot of people understand. Some people kind of get it, some people don't. If you see something trading in a range like this, like SPY today, and we're just chopping up and down, this is like your general price action, how your stock's moving up and down, where it's going to go. But what your price action is also indicating at along your time frames is how strong or how weak your rallies and your sells are going to be. So even when we're selling off here, we can see this once, we can see this twice. That's why we make a dead cat and try to bounce. And we can see this up here too. So I'm just going to observe the major intraday moves for today. We can see, yeah, it is dollar cost averaging, that is correct. You can see price is weak here in our price action. We're not respecting enough of an uptrend, so bears try and bring it down. It's choppy overall. We finally flush after a rejection. Wiki price action. And when I say that, you see these aggressive wicks down. They're trying to push things back up. A lot of intense price action here. Ultimately, bears win. Flush to the downside. We get one more rejection. Flush to the downside. If you can observe these things on shorter time frames and see them immediately, and understand that this price action is already happening and you're trying to get out of these trades quick, I got you, I'll tell you in a second. When you see this wiki price action and you see stocks failing to break their ranges, then it's a good idea to pull out for profits. Understand that you might be slipping to the downside soon, and your 5-minute candles are also confirming that we're not breaking ranges, then it's good to get out. A dead cat bounce would be something like this, where we're trying, what candle time frame is your chart? I've been swapping between 3-minute to 5-minute to 15-minute to, I've been using all of them. In terms of intraday, I'll always use 3 to 5 to 15. Those are my favorite. And then if I'm looking for entries, I'll look for 1 minute. But it's a little risky to do that, be careful. When we see this bounce right here, I'm just calling this a dead cat bounce because this volume isn't enough to take it over this area. If we look at our sell-off here, this is a better example of a dead cat bounce yesterday. Okay, a bounce doesn't really take us high enough. We reject a price and then break down. I think that's a perfect example. 1 minute's beyond my experience, puts me in panic mode. It gets me in excitement mode. I love it. So yeah, just being able to observe price action can help you understand strength versus weakness. We're gonna understand this is really weak because it's just pure selling, but hi honeydew. And the same the opposite. We can also use indicators, and now I'll kind of go over why I do and why I don't like indicators. So for example, let's say you're someone that's like, okay, well I need to see this indicator do this thing with this thing first in order to get me in the stock. You're following proper risk reward. That's fine. And I don't blame you. And you're that person. Stream will be uploaded tonight. We're gonna edit it as best as we can in the next couple of days. I pray to God it's recording. I really don't want to mess up another stream for you guys. It should be. I double checked it. We should be. But when it comes to indicators, you can be that person that's kind of like, oh, I'm gonna wait till we claim the 50-day SMA, and then I'm gonna get in my long, and I'm gonna ride it up to the 200 SMA. I'm gonna get out, and sometimes you'll see me do that. Sometimes you won't. But for example, let's say you got in and you were like, okay, I'm gonna wait till the 50-day SMA is claimed. Well, one, you've already missed $2 of a move, so half of your contract is already gone, at least in terms of if you think we're gonna get to high a day. So another $2. Do I use volume profile? I do. And on the chart at 1620 versus at 1820, top of RSI looks similar, but the price keeps going up. Yes, that's because we eventually get a controlled break of relative strength. Yes, you're identifying. Yeah, good job. That was a good identification of RSI strength too. Good job pointing that out. So like, they basically this level and then this level. Just kind of think what they're talking about. What was the other question? I'm sorry. I will go over support and resistance levels. How do you predict to stay in the contract? Well, that's VXX, that's the order book, that's price action, that's relative strength, that's me observing Apple, that's me observing other stocks. Like, if the market's not moving, this won't move. You know? Understanding what's rallying, what's not. It's just kind of an art at the end of the day. That's you being in God mode, baby. Yeah, you either hold on or you burn with the ship. You know? But going over indicators, like I said, they're helpful, but it's like you miss so much of moves. Could you elaborate on the SMA missing? What do you mean by missing? I have 50, 100, and 200 SMA. These are the only ones I use. I have the EMAs as well, but I just don't have it pulled up. For example, here's like a little EMA trick that you guys might know. So here's why an indicators can be a cool thing if you didn't know. So SPY at low a day. I know this looks like a little rainbow mess, but when we bounce up on the 3 minute and the 5 minute low a day, once we try and make a double bottom pattern, we reject the 14 EMA, which is a short-term EMA trick, where if it reclaims it on the 3 and 5 minute, it's trying to start a bullish uptrend, and then you confirm it with your 5 minute 21 EMA. How do you get confirmation on when to enter? Ripster EMA clouds are also really good if you don't use those. I'm probably gonna swap them because regular EMAs are kind of gross. But it's again, like I said, it's somewhat of a complicated question, but price, order book, price action, candlesticks. So like for example as well, like would I rather get in at a shooting star on 3 minute, or rather get in on a 1 minute doji on a double bottom 4 minutes later? You know, it's the same. Everyone knows these candles. It's still validated prior. It's the price action just needs to confirm it. That's why you swap to your other time frames really quickly and keep confirming your trade. There's a lot when I enter. It's at the end of the day too. Like, I don't want to lie to you guys. Short-term trading is educated guesses, hoping you can do the best and keeping good risk reward. I don't want that to ever be skewed. If you're long-term investing, then you're buying options that have a year plus worth of intrinsic value, and you can sit and long Microsoft and barely think about it. You know, if you guys just want to make safe money, and I'm not gonna lie to you, that's the way to do it. You know, this isn't the way to predict the market all the time. You will have these things like you know, black swan events and random sell-offs and rate hikes and the whole nine. It's a complicated world. Also got to understand when the dollar is running, or when we look at things like US 10-year, like the 10-year yields, and like if it breaks this range, we should all panic and run to the hills. No, I'm kidding, but it'll be scary. Buy longs and SPY, dips with years on the contract is the way. You know? Make sure you're investing for yourself too, because options are a form of leverage at the end of the day. I'm going to start moving to some examples so we don't just look at SPY. Oh, bonds and SPY, sometimes they're run inverse, sometimes together. Yeah, that's interesting. It's an interesting mix. I kind of want to bring up another chart. So here's an Apple chart from today so we can kind of observe. So we get a strong uptrend, we break below or above our little print that I talk about in the mornings that comes up on a lot of stocks, and we kind of formulate it as a base here, and we keep running. We get to my long-term fib resistance, so this general range needs to be kind of claimed on the weekly, and I'll show that later. But you see how our volume ticks up here, and we get a large tick out, and then all of a sudden, doesn't this, if I explain this in real time, doesn't this look unhealthy? Why do we get a back test of this level, right? So we get a new level becoming an area of support, right? Which is kind of where we were chopping yesterday, towards the end of the day. And we come back down, we rally up again, and we start getting wicky up here at this fib resistance. And this is even just on the 1 minute chart. You see this inconsistency of volume just on the bottom, not even using something like the order book. It's showing that bulls aren't strong enough. So we come down, and once this range is lost, that's when we come back and we test these levels. And it's funny because it also reacts to our pre-market levels and our open. Extreme arc discussion, not this net please. Also comments on IV. Use IV to your advantage. IV, you can get fat premium spikes if you know how to get wicked in, like you were talking about earlier, and get paid well for it, because you can just get out really fast for premium spikes. And also I can look at net. I've been measuring it long term. I was originally looking for this trend line confluence to come down. I'm measuring this low right here to this high. I'm looking for this little range to reclaim. So something around this. So still a little bearish on it, but this is a good level to hold if it reclaims 104. That's why you guys are playing for ER run-ups. Yeah. Good. I like that. Yeah, Netflix is a good example, especially today. You saw what happened with those contracts when they were juiced. Even with Ryan entering a candle here on the 1 minute, just on a spike like this was a net is oversold. The bottom looks like it's near. But just on Netflix at this pop, he played this little spike right here, and this is not only a like $8 move short term, but this IV was crazy, over 280% on weeklies, and you could have gotten more money just because of the amount of volatility in relation to the stock right now. So it's something for your benefit. Attached in the seminar thing as well, I put 2 little links in it. The Rabio link is a book, volume price analysis and the study of it, basically, by Anna Culling. It's a really cheap book if you want to buy it for yourself on Amazon. It's like $25, I think, for a paperback, or 18, something like that. Good book. You haven't read it. And then the second one is a candlestick analysis book, or link. Yeah, PDF copy on the net. Yeah, that's why I linked in the seminar thing. And I love that author because she's good. It's not a crazy read, but it's good. It takes a while to get to the point, but it's easy to understand. Good stories. I kind of want to go over some candles real quick to also associate things with price action. I provide some examples in the little book if you want to follow along. One, shooting stars. This was Home Depot all the way when I made a run in March of last year. That was almost $100 in a month and a half, 2 months. A shooting star comes up after an exhausted uptrend. It's a somewhat medium term short signal. The following price action needs to confirm it. These candles are more validated on your longer term time frames, so daily, weekly, 3-day, things like that. Another candle that I really love to trade is a doji candle. Following price action needs to confirm it, but here's some examples of dojis. It's a reversal of trend, basically. So we can, actually, here's a good example. We gap down after ER in Home Depot, and we put a doji candle in, and it's a very thin body candle, and the following price action is trying to reverse to a bullish trend the next day. So keep a lookout on these if you see them on your charts. Now, if we want to combine a bunch of different tools, so you can use a bigger example of things, I kind of provided this. It was Twilio. Growth has been getting slapped for a bit, and even if you didn't understand growth and you're trading the technicals in front of you and you did your fibs, and we've talked about all this fun stuff, we get a break below our short-term base trend line. The RSI is nowhere near strong. It's not over 50. We get a doji candle here. Price goes up, rejects trend. We get a rejection, and we get an inverted hammer, which is a bearish signal. We come down. Even if you shorted this to this, that's a $30 move. Huge move for options. 2 days. Easy trade. Comes down this low, tries to hold it, rejects this former area where we sold off at. We come down, we make a hammer, and we reject that former low again. And so now we come down one more time. Now we have a doji and a rejection of our fib. So for us to be bullish, our port 618 needs to be claimed again. And this is that golden confluence area that I scream about all the time. It's one of my favorite areas of support. And this is me measuring Twilio on a long-term time frame. I'm measuring it all the way from all-time low to 2019 highs to COVID lows. Okay, so it's a good area for me. I'm eyeing it to see if it holds. Now, I kind of want to show more examples to you guys for pre-market supply and demand price action that you can kind of use for trading, and then from there I'm going to be taking Any requests or any other questions, and we'll kind of end the night. So I'm gonna, instead of Soundest wait to see if Twila to make a move. Yeah, basically, it's one of the watches on Tuesday. We can talk about watch lists. That's a good one. That's no problem. So I want you guys to kind of give me, I'll go the first 5 tickers, whoever's first, how we can kind of start using pre-market levels. Please don't give me stocks like Rocket, Wish, things like that. Give me things that have lots of volume, S&P 500, blue chips, those kind of names. Not Hood. AA might work. I haven't tested on this one. I'm thinking more of those big fancy stocks. Activision might work. We'll try it on that. Airbnb, I'm pretty sure works. It's better on blue chip like FANG. So we're thinking like Microsoft, QQQ. Yeah, there you go. Questions on thesis behind Netflix? I got you. Exxon. A list? I got you. Alright. So let's just check it out. So AA. Same thing. Pre-market dark pool print right here. We also have another one here. So you see how price started to become bullish once or resisted once it tested that area from this one. Same thing at 8 o'clock here. Price starts getting really wicky and just responds out of nowhere. Not the best on small stocks. I'm starting to see it already though. Activision, we broke out of that large print. We rallied like crazy. Same thing here. Chopped on this one. Yeah, not the best. I'm starting to see on smaller names. No, Airbnb, no. I'm pretty sure Microsoft's will work. Yeah, Microsoft. Boom, here's a great one. Microsoft and another one. So this first support, this second support. So this would have been 2 price targets already if you shorted high a day and you played this as your stop. Of course, you never know. This is going to be the flush it open, but have you gotten to the move late? We can go at Microsoft over here on this left side as well. So bam and bam, flush below it open, retest of it. There's that same low, break up, resistance, break above it, we break out. QQQ, same thing, dark pool prints. This is gonna look exactly like the Microsoft one for the most part. How far back do you go? Depends what I'm measuring. If I'm measuring something for a day trade and I'm gonna be out of in 2 hours, I don't need to go back more than a couple of days. But if I'm in something for a couple months, it's a completely different discussion. Exxon, let's see if it works on Exxon. Yeah, Exxon works too. Yeah, so things with large liquidity, I'm saying it looks like it works. Airbnb, oops, that's bam boom. Airbnb kind of works, not the best. Nvidia probably works. Yeah, Nvidia works too. In terms of how far back I go, that's a hard question, man, because I measure things all the way from like spaced out. What is that called again? I'm just gonna say I don't have the proper term for it, so I'm just gonna say it's dark pool pre-market activity. Dark pool pre-market activity. I think that's what it is. I might be wrong, but it works regardless. So, how far back do I go though? Like, remember, I'm holding things in terms of like a Roth IRA, so things for years and years and years. So like, for like we can go with AT&T for example. I have no idea why my chart did that. That's awkward. Interesting. Are all my charts screwed up? Okay, no, Ford, cool. Like Ford, for example, this was me measuring the 08 crash, the 2014 high, and the recession or the COVID low, and a trend line breakout on the monthly all the way from 1996. You know? So Until I can stay green and fund flow data, I'm relying on charts and tape. Flow is pretty useful. I'm not going to say flow is God's heaven's sake and all. It's just another tool. Some people love it, some people hate it. I think it's just another thing. It's just large money. Imagine if I had $1 million and I could influence something. You would want to follow the person who made the bet on the $1 million that's educated. And flow can be wrong. There was literally $8 million worth of Nvidia calls yesterday burned to the ground, worth 0. Can you talk about double bottoms, where it precedes them, how to be used correctly? I can. We also don't know when they sell. That's also true. And you also don't know if they're bought to open or they're sold to open. So double bottoms. We're gonna look in the 5-minute here. This is a quick little one. We can call pre-market double bottom here if we want, or we can call the live price a double bottom because it technically does one too. Regardless. So this is the thing. I'm an aggressive trader. Me buying into this down move is still risky as fuck. I don't recommend it. Play puts on this. But if you are playing a double bottom, you would think that you're supposed to get in here on this double bottom. You're not. You're getting in early. That's not a bad thing by any means because you're capturing a whole dollar before other people get in. But the technical way to trade this is actually these levels. So if you see people getting in early on these double bottoms, you know, these are people that are betting against it not hold, or betting against, or betting that it will hold. Sorry. Yeah, so you have to break it above the neckline though. It's the most important thing. So this upper range is important. I identified 2 to 3 necklines just because I like to keep multiple because there's usually multiple, but this would be that major one you need for it to be confirmed, because a double bottom's trying to confirm the entire range of the space and then break above it. So, and even then you still need to get above high day. So, yep. That's everything though in relation to the little Google Doc. If you guys have any questions at all, I'll answer anything. We can kind of do like a quick little and a 15-minute session, and any questions at all, and then we'll do charts, I guess. Oh, someone asked about watch list, I think, if I'm not mistaken. Can you do a quick bar replay on entry and exit? Yeah, I mean, would it look like live? That's a good idea, actually. Thank you for that. How fast would this go? And what it looks like? Yeah, that's a good idea. Thank you for that. No, I'll put a replay. We can literally show that 1 minute, so we can, what we talked about earlier. So I was literally watching from 9 a.m. to open. We're gonna make this update every 1 second so we can kind of slow it down and see. So price makes the support there, stocks rally a bit, comes down. Replay mode's really good if you don't use these, by the way. You know, market's getting close to open, market is moving on forward. We get volatile in the open, we come down. God damn it, that's gonna be so hard to slow down. Let me try this one more time and then I'm gonna move on from it. I'll just do it on a super slow time frame. Right. So, you remember how I talked about getting kind of wicked in on that SPY trade? Damn, there's like no 1.5 second. It's kind of annoying. Alright. So, this is just every 2 seconds watching how it moved on the 1 minute chart. You know, we get ticked down, it comes down, and then that's where we start getting our aggressive fills, because it broke down to this level prior and then continued. and then we get 3 white soldiers as well. And even if you just scaled out 1 here, it made a higher low, so it kept going. But this is where getting off your 1 minute would be too noisy. Like he was saying earlier, that's too much for someone to handle. You know, not everyone can get used to that. But this is still a weak uptrend as well. You can see how sensitive it is. Find it difficult to spot cup and handled, or they're pretty rare. I don't like to really look for those. The last one I can even remember, y'all probably didn't even notice it. Most people didn't, but Nvidia was a cup and handle actually when it ran for its stock split. I'm not gonna make it perfect, but you see the cup, you see the handle. Zoom had one before it fell, yeah. Do you usually look to play against news plays? Yes and no. Like if it's a pop like that, like the reason why I shorted the pop is because I had an extension made when it came to Netflix, and I was just kind of watching levels and like level 2 data, and they started slamming it with shorts. So I was just like, okay, I feel like they want to flush this, but the IV was too fucked anyways, so it was almost a loss. And then if I wanted to play next week contracts, they were $2,000, so it's like I didn't want to do that. Excuse me. But it was an immediate short after we lost this level. So I'm gonna say yes and no. Depends on what the news is. Watch lists. Watch lists are a little complicated. Not everyone is gonna be able to make the same watches and get the same levels at the same time. It's gonna be a little different. Like I showed you guys earlier, I've showed you a bunch of different ways how I get my levels and what I look for. So Fibs, support, resistance, and price. I think one thing we can look at here is Nvidia. This is a perfect example. Looked at a couple of days ago. This support, this low, this body. Alright, so we go back a couple of days. Boom. What happens with price? Even if you miss this flush, you still get a whole nother like $20. I like to keep it really simple in relation if I'm charting a ticker. So let's say I'm gonna I'm gonna do this for you specifically, Alvarez. Alvarez, give me 3 tickers that you want to chart. Your personal 3, no one else's. Sorry, but this is for him specifically. And I swear to God, if he gives me AMC, I'm gonna cry. I put him on the spot. I feel bad. SPY, Apple, Tesla. Cool. Alright. So, SPY. We've already talked about the levels for all that, so I'm not going to really overcomplicate that one too much. I'm measuring extensions on Fibs with this one. So, my levels for this would go as followed. I took extensions and I measured these 3. So bam, bam, bam. And my upside levels would be here on the right side. And they generally match up with price. Regardless, if I was just going to do intraday trading and I didn't know how to fib and I didn't want to overcomplicate my charts and I want to keep it pretty simple, I would go to like, let's say the 2 hour, let's go 2 hour, 4 hour. We want to keep these bigger zones marked. They're more important than our longer zones. So this area is generally important. It's going to be a pretty long-term trigger. 473 is the god level. If SPY breaks above 473, we're going to run to the moon. This area as well. This is how I did it. Not even kidding. This is how you start. And you just slowly get your niche. But marking long-term levels like this will help. And then if you're playing things to the downside, we already can see this. we can already see this. So just general ranges of big support and resistance. I use no scanners. That's what a lot of people also think is kind of crazy. Every single night, so like some people have more dedication to it. That's why it kind of is at the end of the day coming down to your whole niche. I will scroll through this list of 100 tickers. Doesn't mean I'm gonna sit here and go, okay, I'm gonna intricately calculate every single thing that it's doing, but I go through every single one of these tickers and I update them and I see what happened and I go from there. And if it's following my rules, then I play my rules. Is there a way to share a watch list? It's getting for noobs. Is there any way to share watch lists? I think so. You can, if I'm not mistaken. Is it a file? Let me see. I've never tried this before, so please bear with me. Export. Okay. Edit that out the VOD, please. Thank you. You guys can copy that or download it and then apply it. I'm pretty sure, but that's everything I use. I'm missing a couple from there. I'm just adding them as time goes on, but that's everything I have. That's everything I've liked in the past couple years or so with decent liquidity. I'm definitely missing a lot of names, but most of these are my personal lists too. My list doesn't have to be your list. How do you even decide though? At the end of the day, I just pull up the chart and go from there. And then what I like, and really, I look for relative strength. So like, for example, D-Dog today being at a golden confluence, RSI being at 30, and it being at like a decent support, and being hard green and rallying at the end of the day, is bullish for me for Tuesday. Doesn't mean it's going to confirm it. I need to see more confirmation over levels and do more longer term trend line stuff, but you know, that's one of my watches. Riley, what's your thoughts and knowledge with opening range break? I need to look more into that. If you guys have, I've seen a ton of stuff about it on Twitter over the past couple weeks. If you guys have, if Honeydew, I think you know what orbs are, or Pika, I know you guys know what those are. If it really just is the opening range break and like I'm overcomplicating it, like SPY like this, I don't, like I need a definition of exactly what it is to comment on it. So if you guys are still here, I'm gonna step in because I don't know about it personally. Like I know it, but I just need to look into it. What is it? Is it just like the high and lows of like the prior sessions? So like the high low of it? Or the low high? So like 5, 10, 15, 20, 25, 30. So like this low. Yeah, I mean like, sure that would have worked. You could have just kept diamond handing and just changed your fibs, but like you missed out on a whole $4. I mean, it's cool. It looks like a good system, but I don't like intraday fibs. I guess that's a good way to talk about it. I'm not a big fan of intraday fibs. Some people like it. 9:30, 10 a.m. and opening range. There's also afternoon range play. Yeah, so like you could keep adjusting this, and for example, like we get a low to high here, and we get a 1.272 here, and so then I apply extensions, and I go bam, bam, and bam, and I mean we get that. But it's also showing the same thing earlier, like I was showing you on the daily. This is why I was saying you can kind of fib any range, because I can go bam to bam to bam, and you know how we had all that noise in that chart versus I get one clean rally to my level and price starts reacting there immediately. So it's like, do market makers have it's maybe the mathematical formula works around this, and maybe it also works around the other one. I don't know, but it looks pretty decent. Looks okay. Looks okay. I'd say try using it. I'll test it out for you next week. See what happens. Of course, we're learning together. I didn't even know. I've been seeing about it. I didn't even know what that was. So it's good to know. We got about like 15 minutes left. So I was gonna kind of end it around 8:30. So I guess we can just kind of close the night out with chart requests.